I started this company straight out of college. We went from a $15 million segment to over 3 years, $150 million segment of the business. I thought it was the worst thing that ever happened to me when I got fired the first time. Like, I remember crying, like a grown man freaking crying in his room. Like, I thought these guys were my friends. Almost every location bills at different rates. So a physician's group in Iowa may bill $1,000 for a total knee, and a hospital system in Miami may bill $10,000 for a total knee. And in that same example, if I go to a hospital and I say, hey, I need a total knee, and they say, okay, cool, $10,000, and you say, oh, I'm cash pay. I only pay, like, I'm private pay. Oh, okay, well, a cash pay amount is $2,500. I'd never done a startup ever from scratch. I had only ever purchased businesses. I'm grateful that I'm in the position where I don't have to work anywhere that I don't want to work ever again. I'm not rich enough where I can buy an island, but I have enough money where I can be selective with where I put my time, which is awesome.
My name's Max Gagliardi, and this is Always Be Building. If you're watching this video, take a moment, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app. Hope you enjoy the show.
Nik, welcome to the podcast. Thanks for coming on.
Stoked to be here, Max.
You've done a bunch of different interesting things. We've met through Twitter, like so many of the guests that I've had on, and I've interviewed your one of your business partners, Chris, and it was a great episode. Real quick, for those that don't know you, give a quick background and we'll launch into it.
Okay, the quick story is I graduated college at 27 in 2012 and always knew I wanted to be an entrepreneur, but my wife wasn't comfortable yet with me doing entrepreneurship. So I went and got a W-2 job so I could get some experience. In hindsight, she was right. I was wrong. But I got a lot of really good experience, healthcare experience. After about 10 years, I decided I was done, and not 10 years, 7 years. Sorry. I decided I was done and started buying and building businesses from scratch. So bought my first company in 2020, started another company in 2020, grew each of those companies, sold those companies in the last 2 years. And then at the same time, have been starting and investing in other businesses along the way. Over the last 5 years, the companies that I've either owned or operated have generated over $100 million in revenue, and been in industries from crypto mining to tree trimming to home health and hospice and back. So it's been a wild ride the last 5 years in particular.
That's awesome. These are the kind of stories that I love, and talking to people that have built things and that have gone on this path. One thing that's interesting is you've posted about your experience getting let go from a job. And I've been there before. I've only had it happen to me once. And it was something where I felt like I had added a lot of value. And then because of organizational changes in politics and things, I just basically kind of got kicked to the curb. But it was the best thing that ever happened to me. It's what launched me into my entrepreneurial journey. So talk about that story a little bit.
My personal opinion is this. I think there's some people who are just internally motivated and they're going to take the leap. They're going to jump. They're going to, like Chris, my business partner. He has the make it happen gene. If we ran the simulation of life 100 times, he's going to start a business 95 of those 100 times. That's just in his genes. For me, I was not like that. I started this company straight out of college. We went from a $20 million segment, $15 million segment to over 3 years, $150 million segment of the business. And I was one of the core people that was kind of driving that growth. Had I not gotten fired from that job, I'd probably still be there today because I like the people that I work with. I believe we were building something great, and I'm loyal. I'm a loyal person. I thought it was the worst thing that ever happened to me when I got fired the first time. I remember crying, like a grown man freaking crying in his room. I thought these guys were my friends,
Yeah.
But I think that in being fired and failure gives you the opportunity to learn. And I learned a ton about myself. I learned what I was good and not good at. The reason I got fired from that job is because I was terrible at sales. I didn't know how to go out and pound the pavement and generate sales. And so that was a skill that I had to work on over the next few years, or at least supplement over the next few years. So I just am a big believer that failure it sows the seeds of our future success. And I think that those experiences, you rob yourself of life and success if you're not able to go through those experiences early in life. So I think it's a good thing you got fired, frankly.
Yeah, I agree. I mean, I think through failure is where you learn. I know that's like a cliche thing. You see people saying that a lot, but it's just so true. And I think that there's people that I've seen that have had a really successful, what I'll call like act one, where they either got into the right job and got promoted up really high, or they started their first business and sold it for a giant number. And they never really had that like pain period. And then I've seen it like more often than not that they kind of like, that was sort of the crescendo, and then they try to go do other things and they're like, why isn't this as successful as this first thing that I did?
Yeah.
And that seems to be almost like a proverb for people that have like really early success. Like, what's that saying that Naval says? He's like, never listen to people that got rich quick. They're just reading their lottery numbers out loud for whoever will listen. And it's like it's just like I mean, the pain and the failure a lot of times is just sort of like you go through that and it's what makes you learn,
I
and then
liken
it
it
teaches
to
you things.
I liken it to like working out, right? If you're trying to build muscle, what are the most important 2 or 3 reps? They're the last 2 or 3, right? Like it's going to failure. It's when you feel like I can't go any further and you push through it, or you actually fail. You push so hard and then you fail, and somebody's there to spot you, that you actually grow the most. Like it's in those last 2 or 3 spots that you are actually building the most muscle. And so if you're pushing yourself to the point where you're not actually failing, I don't think you're not growing as much as you otherwise could, as quickly as you could, or as much as you could. And I think that's a shame, to never know what your true limits are. Now, the flip side is you got to have somebody there to support you, and like you got to have like some system on the back end, but I think it's important.
Well, and feel smart too. It's like, I talk to a lot of folks that want to get into starting something on their own. And my advice is always just like kind of start small. Like if you fail at it, it's not going to ruin you, like you don't have to
Yeah.
go. And not everybody does that. Some people go, dive in head first and, they kind of sink or swim. But, starting slow can also be a way to like never get started on something really big. But a lot of times I see people get into something new, going in a big way before they even really know if they're good at it or if they're going to like it. So my advice is always like, start doing something that's getting you towards that goal. Even if it's something as simple as like, buying an equity or a public stock of a company that's in the business that you're interested in, and tracking their metrics and looking at it and trying to learn as much as you can about it. That's like something small, but it's like, sometimes I just think people, if you're going to fail early, like just make sure it doesn't wipe you out. But yeah, I think it's part of it for sure in the learning process. As you got done with that, and you said you felt like it was the worst thing in your life, like I can totally relate to those feelings. What were like the next steps, and how did it lead to getting into your first venture?
So it was actually 5 years between that firing and getting into my first venture. I still had a lot more growing and learning to do. I went back and got my MBA. But I ended up joining another company with some friends of mine who I worked with previously. They started a company and they said, hey, come join us. We'll give you some equity. You can run this region. And I thought, cool, I've made it. I got equity. This could be worth $1 million. I'm like, man, if we grew to 100 million, I could have $2 million. That they offered me up to 3%. And I got there and I grew, but I also learned a ton. I learned how to negotiate. I learned how to do the due diligence. I learned how to finance. It was an amazing learning experience. But when it finally got to the point of, hey, we're ready to exercise, your equity option, the dynamics kind of changed, and they were in some financial trouble that I didn't know about. And so in order to get the equity, the 3% that I was hoping for, it turned into this, hey, we need you to purchase an entity from us. We're going to use that money as working capital. But in order to purchase it from us, you've got to sign a personal guarantee, put your house on the line. And I just wasn't comfortable with that. I'm like, I have the same downside as you, but not the same upside.
Right.
So I told them that. And then 2 months later, February 19th, my wife is in labor with my son. And I get a call from them. It's like, hey, can we meet? And the long story short of it is, turns out they were in worse financial shape than I thought. They got a private equity investment. And one of the criteria from the private equity investment was, hey, you got to cut headcount. And I had told them, I'm not interested in mortgaging my house for this equity, and I want something with equity. So they knew that I wasn't long for that role anyways. And they ended up telling me I was fired. the day my wife goes into labor. So that experience was like the catalyst for, I don't ever want to be at somebody else's, I don't want to be at the mercy of somebody else's generosity anymore. And I think a lot of times when you're in a job, you're at somebody else's mercy of whether or not they like you, whether or not they advocate for you. You know, if you get equity, if you get a raise, if you get a bonus, whatever it is, just kind of depends on such subjective criteria. And that was really the impetus for closing on the first business. So I bought a medical billing company and brought my brother-in-law up to run it. And then I started a home health and hospice company at the same time, moved to Boise, and grew that over the next 2 years. So that was like my first, okay, push. It's now or never. I'm never going to have this opportunity again. COVID was nuts. I have all this time on my hands. Let's sell our house. We'll use some of that money as capital down. And I was able to run with it. But I wouldn't have been able to run and execute what I did over the next few years if I hadn't gone through what I went through, you know, being fired the first time and then going and working for a company, learning a ton of skills, and then being fired the second time to sort of spur me along.
Well, I mean, I think that's the push you needed, and you learned a lot. And to your point earlier around not being able to control things, that's always been something that really bothered me. And I felt like when I left the last, like, you know, corporate type job that I had, that's what stuck with me, was that I knew that I had created value, but I just felt like I wasn't steering the ship. You know, it's like, you can do as much as you can do, but if somebody doesn't like you, like you said, or there's like politics involved, or if like money gets involved, like where it's like they promise you something and then like now it's time to pay and no one ever wants to, it's always like things can get weird. And so, you know, everything I've tried to do, I've had some kind of partnership role, and either it's like a consensus type thing, or I've got a majority, or we've got equal, you know, governance in it, but something at least where I feel like everybody's pulling on the rope and you can make a meaningful decision. And I think that's, for me, you know, whether that's a good thing or not, I don't know. Sometimes it's like, maybe I should be more passive in things, but I've always felt like if I can, you know, put my finger on the scale, I can tip things in the way that I want them to go. Sure. When you bought the medical billing company, did you do an SBA loan, or how'd you go ahead and get that? And then what was like the background that you had specifically? Because that and hospice are both in medical or in healthcare, but they're not exactly the same. What made that the right acquisition? How did you do it?
The first company between 2012 and the end of 2015 that I worked at, they were growing like crazy. They went from like a $15 million segment of this large publicly traded company to a $150 million segment. And in order to grow that quickly, you had to build out these centralized services. Now, they didn't centralize everything, but they centralized a lot. And so as a part of that growth process, I had experience with centralizing things: billing, coding, HR, AP. And then that other company that I talked about, that I got fired from, man, I get fired so often. Sort of a similar experience, right? They were growing and they needed to centralize some services. So one of the things that came out of it was like, geez, I love supporting healthcare companies. I don't necessarily love owning a healthcare company. So is there something I could do in that space? And that's how I was able to get it through the SBAs, because I actually had experience with these administrative services, medical practice management, billing, coding, collections, all that stuff. And so yes, it's not exactly the same as home health and hospice, but the functions that I had been managing and creating and building were similar to the functions that the medical billing company was providing. And it was a great experience to go through the SBA process, you know, the underwriting, taking it to committee, all the back and forth that you have to go through. I ended up buying that company, and my brother-in-law ran it day to day. I didn't run it day to day. I had involvement in it, but it wasn't something that I was solely focused on. At the same time, I started a home health and hospice from scratch with my other brother-in-law, pretty incestuous. And he is a partner in the large skilled nursing facility company. They have like 60 facilities, and the idea was to start here in Boise and to grow. And he knew I was moving to Boise to buy this medical billing company. And so he was like, hey, if you're moving up here, why don't we partner on this? So it just made a lot of sense. And then over the next 2 years, we grew that from $0 to $11 million, and we sold that a year ago. So, and 2 years ago, we sold the medical billing company. My brother-in-law, who was running it, was kind of getting to the spot where he's like, hey, I kind of want to do my own thing. What do you think? And it just made sense to sell at the time. And it was great. I mean, we bought at like the COVID low and sold at the peak asset valuations in 2022. And so the last 2 years I've been selling businesses, and over the last 6 months I've been kind of like trying to figure out, all right, what am I doing next full time?
Yeah, it's good stuff. I would love to hear more about the details of some of these. So sometimes when I have guests on that aren't in my specific background, I just start to try to pry and ask questions. So some of these may be dumb, but I know enough about medical billing to know that from my experience, it can be complicated. When I get medical bills, there's a lot of times I don't know what they're for. You hear all these like gurus on Twitter being like, always fight your bill, never like agree to the first one that you get. I don't know, I hear a lot of that anecdotal stuff. Then I hear from, I've got some friends that have a medical lab, and they're always talking about the hassle with billing and trying to get Medicare and, these things to reimburse you. And it just seems like a very kind of complicated, convoluted, thing. Am I hitting on anything that's an actual thing there? Or is it just anecdotes?
People may fall asleep by this explanation, but let me like kind of walk it through with you. There are kind of 4 main ways that healthcare providers get paid. Okay. The first way is Medicare. That's over 65. I'm like simplifying it, but let's just say that's over 65. You paid into this your whole entire life. Medicare pays your bills. Cool. The second way is Medicaid. That is not an age-based criteria. That's an income-based criteria. So you make below a certain amount of money, Medicaid pays your medical bills. Then there is commercial insurance, and commercial insurance can be like a combination. It can be a Medicare HMO, insurance policy, Medicaid insurance policy, but commercial insurance, that's like we pay into our employer, and then they're subsidizing it through our premiums in order to pay our bills, et cetera. And then there's just private. I don't have any insurance. I just pay out of pocket, right? So like those are the 4 ways that people get paid. The problem with the healthcare system is the following. There is no standardization around what a procedure costs. So there's standardization around what a procedure is, and there are codes for each one of those procedures. If I go and get knee surgery, if I get hip surgery, if I get heart surgery, like there are codes around what services were provided, right? But almost every location bills at different rates. So a physician's group in Iowa may bill $1,000 for a total knee, and a hospital system in Miami may bill $10,000 for a total knee. So their billing is just different. Right. Then you get into the world of Medicare, Medicaid, and commercial insurance plans. They all might pay differently. They may have like standard rates. Now, I take that back. Medicare pays one rate. They're pretty much, hey, this is what we pay, and that's what you're going to get. The commercial insurance plans, they will come in and say, oh, you charge $10,000? Sorry, we only charge $5,000. And maybe you have some wiggle room to negotiate up, but for the most part, they also sort of set the price. The problem with that is you now have this like fabric of patchwork pricing models around the country. So there's no standardization or transparency into what a procedure actually costs. And in that same example, if I go to a hospital and I say, hey, I need a total knee, and they say, okay, cool, $10,000. And you say, oh, I'm cash pay. I only pay, like I'm private pay. Like, oh, okay, well, a cash pay amount is $2,500. Like, well, where was the big difference there? Well, the big difference is they're marking it up as much as they can to see what either Medicare, Medicaid, or these commercial insurances will pay. Once they find out you don't have insurance, they're just like, oh, cool, I'll take what I can get. Here's $2,500. So that's like the craziness of billing and the cost of everything. The reason that people that you see on Twitter are like, never pay the first bill, always fight it, is because there is so much ambiguity. There is no set price. There is no standardization across the country. And so for many people, it's like, oh, hey, your bill is $20,000. If you fight that, you can get it knocked down to $1,500 in many instances, right? Because the amount that the surgery actually costs the hospital is not 20 grand. It's probably somewhere between like $500 to $1,000. Everything else in between there and the 20,000 is just a markup on that. So if you go and you actually fight with that company, the hospital, then you can get it knocked down. That's why they're like, never pay the first bill that you get.
Right.
And And the reason you get the bill is because either your insurance company hasn't covered it or you don't have insurance. So that's a very long-winded answer to say, yeah, medical billing and medical coding is very complicated. The coding piece is it's standardized, right? Like black or white. Do they have this diagnosis? Do you not have this diagnosis? But the billing component, what you charge, what you collect, it varies from physician to physician, hospital to hospital, practice to practice. And so that's where these physicians need services to come in and actually bill and collect for them, put together their systems, send out the bills, post the bills once they're paid, track their accounts receivable, because they don't want to do that. They just want to go and spend their time actually providing procedures as opposed to doing all the administrative stuff.
That makes a ton of sense. And I'm interested in this because we recently hired a guy that's on the data side who's really talented, didn't have a energy experience. It's in our energy company, but he'd come from I think it was either a medical billing or I don't know exactly what they did, like processing, but they were specializing in all these different formats that you have, some things in Excel, some things in PDF, none of the standardized formats. And they're trying to like aggregate, and I don't know exactly what they were doing, but it was a similar problem that we faced in oil and gas. Like when we sell, when we sell natural gas or oil, you just get this whole, deluge of different formats and file types and all these things. And then the accounting systems then are homogenizing stuff. They're trying to get it to just a summary. We'll just total up all these fees or total up all this revenue and we'll drop it into an accounting system because it would be way too complicated for us to capture all this detail in these statements. And so I'm wondering, because that's something that we built some tech around, helping that in our industry. Like, is there standardized formats? Are there ways for people to benchmark or compare? Is there a database or an aggregation of all these? You said everybody's pricing is different. I mean, just in general, the data side around this stuff, just your thoughts, because that's pretty interesting to me.
Yeah, I mean, there's a theory, it's called arbitrage. When there's inefficiency in the market, people can make a lot of money.
Yeah.
And that's essentially what's happening right now is the healthcare market, it's not a bug, it's a feature that there's inefficiency. And the reason that there's inefficiency at the moment is because there's no standardization around these tracking things. If you go to a physician's office and they enter in your patient record, and then you go to a new physician's office 2 years later, what's that process like? Have you been to a new doctor
Probably
lately?
different. Is it the same? I mean, the same type of
No.
process.
No, I'm just
they
asking,
have
like,
those.
When was the
I've
last
been
time
to a
you
new one. Not lately. No.
with kids?
With kids, we try to keep them with the same one, but
Okay.
my wife usually takes them. I do sometimes when
All right.
she makes me.
So what usually happens when you go to a new doctor, fair enough. What usually happens when you go to a new doctor is they're like, oh, okay. They like whip out their documentation system and they start asking
Make you fill it out.
Questions. Yeah.
Yeah.
They're not getting necessarily your health record from somewhere else. And if they are getting your health record from somewhere else, guess how they're getting it? They're getting it either in an email or they're getting it faxed to them. And then their team is looking at it and they're like, oh, okay. And they're hand keying it into their system. There's this term, it's called interoperability. There's no interoperability across these EHRs, these electronic health records. So there's a massive amount of administrative inefficiency in the market right now. The government is trying to mandate it. They did the first step where a couple of years ago, they were like, okay, no more paper. Like we just got off of paper. That's the crazy thing. Within the last 10 years, we just got off of paper. But they said no more paper. And now they're trying to build these systems where you can have interoperability because, I mean, think about that. If you're someone who's chronically ill and you're going from one care setting to another, or you're going from one specialist to another and they're transferring paperwork, how long does it take for that specialist to get up to speed? And how do they get up to speed? They're printing it, they're reading it off. Maybe their admin team has entered things in. What if they enter things into the system wrong? Even if they're entering it into the system wrong, a half of a percentage of a time, that's still millions of patients across the United States and millions of encounters every single year. So to your question, yes, that is a massive opportunity. And there's a ton of money being thrown at it right now in the venture space and in private equity, because whoever can solve the interoperability issue it's the holy grail. They're the ones who are going to just clean up. So there are some big players in the space, Epic, I'm trying to think of some others, but that are the electronic medical records they're trying to kind of bring everybody into a standardized system. But no, there is no standardized system. Now,
My thought is that machine learning is going to help with this, because like that's what
yes.
we've ended up leveraging with our stuff. Like we ended up just, we used to build all these mapping tools and all these things where we have to like find a new format, then we got to solve it. But then we started just training machine learning on it, and it's like incredible how quick it can.
Machine learning is definitely a part of the solution. Artificial intelligence, which, I mean, machine learning, artificial intelligence are similar. I think artificial intelligence is just like 3 steps down the line from machine learning. One of the things that is like difficult in this space is like, think about it like this. Did you know there's 2 types of PDFs? I didn't know this until recently. Did you know there's 2 types?
I probably should know that, but no, not really. Like, people smarter
Some
than me
nerd,
deal with it.
some nerd listening to this is going to like email in and be like, actually, technically the way that it works is, but this is how I understand it, for simple-minded people. There is the main type of PDF. It's like 75% of PDFs, which are basically HTML. Those are the ones you can open up, Control F, and search for things. You can find different information on that PDF. And then there is, about a quarter of all PDFs, non-HTML. It's just a picture.
Right.
And those you can't search. There's no searchable function on those PDFs because it hasn't been mapped to anything to be able to search against. Well, artificial intelligence is now allowing us to map the picture, the unmappable PDFs. We can now search those because it's essentially taking those, mapping them onto something else, and then querying that against what it's mapped. So now we're beginning to open up a quarter of all health records. Think about that. It's nuts to me that 25% of all medical records was just like inaccessible from a technology standpoint. But what that does now is it allows AI, LLMs, machine learning, whatever you want to call it, to mine all of this data and get better and better and better about recognizing problems early. That's on the like patient-facing side. On the administrative side, it's getting better and better and better about automating things, right? And I think the next iteration that we will see is like, we've seen LLMs, those are fantastic, but the next iteration are going to be these agents from the LLMs that will be able to go and act independently, not pushed from you, the user, to say like, go find me X, Y, and Z. You write it one time, tell it sort of broad parameters, and it will be able to go to the electronic health record of the other provider, the portal that they put those medical records into, pull them, transfer them into your system, and then now the patient is uploaded in your system with the correct patient information, and your team can just go in and look at the information to make this health decisions, as opposed to doing the administrative function of actually like entering them into the system. So I think that's where a huge opportunity is. And it's not necessarily in the big health systems. It's in these standalone mom and pop, physician by physician office who just don't know about artificial intelligence. They don't know about the LLMs. They don't know how to implement this stuff. So yes, I think there's a ton of opportunity coming down the pike with this.
It's really interesting, man. We only have 45 minutes. I feel like we could go. I just talk about just this for an hour, but I just like growing these businesses. Like when you buy something through an acquisition, you have to have a plan for growth. Just the different strategies for both I'm sure it was different for the billing company as well as the hospice care company. But just how did you think about, okay, I'm going to do this and I'm going to do it better than other people because of these things? And obviously there's an operational component and a service component, but then there's sales, marketing, scaling, growth, tech that you have to implement. I mean, just kind of walk through the plan on how you're going to take these things from where they were to where you want them to be.
The way I think about sales and marketing today is very, very different than I thought about it 5 years ago. I'd never done a startup ever from scratch. I had only ever purchased businesses. And so a lot of the growth was theoretical. It's like, okay, this is how I think it should happen. And I had also told myself in my mind, like, I'm not good at sales, because my experience with sales had been when I got fired, which was like, go knock doors, meet people, network, and sell, which is a form of selling. It's definitely a funnel for sales, but it's not like the funnel for sales. What I learned over the last 5 years were a couple of things. With the startup, I didn't focus on sales. I know that sounds weird to say. My focus was on building a culture that would attract the best people, because I believed that if I could attract the best people, that would bleed over into everything we do. Our care would be fantastic. Our reputation would be fantastic. And we would grow. And that played out. Just being a place where you could attract the best talent in the market allowed us to grow faster than any other competitor in the market. And now I just got a text from the guy who I recruited to run it, a good friend of mine. They're like the second largest hospice in the market in 3 years, which is kind of crazy to think about. So for me on the startup side, a lot of it comes from company culture. I just think it's incredibly important that you create an environment that attracts the best people. On the billing company, I honestly didn't think about it that much because I just wanted to buy a company that was steady. I didn't care if it grew. I was like, okay, cool. It's got steady cash flows. Even if we grow at like the pace of inflation every single year, I'm happy with that. I didn't really think about it. Now, especially over the last year, what I've come to realize is, and there's a saying for this, first-time founders focus on product, second-time founders focus on distribution. Now I'm realizing like how important distribution is. Doesn't matter how good your product is if you don't have an opportunity for distribution. Now, with hospice and home health, I'm in patients' homes, I'm in those care settings. So like that was a distribution mechanism. They were seeing my clinicians, they were seeing my team, they knew that we were good, and it was inadvertently good marketing. Luck on my part. It wasn't any foresight, it just was good marketing. On the medical billing side, we're in a back office. So like that doesn't work. Just because you have a great team, it doesn't really work. And so like my mindset has really changed now to figuring out what your distribution looks like. That's why I'm leaning so heavy into content. I think building an audience is incredibly important. I think understanding your product audience fit is incredibly important. But I also think you need to identify in your business, where do your customers come from? How do they find out about your business? And then double down on that area. You don't need to reinvent the wheel. You just need to double down on it. So it's a very long-winded answer to say, I think it's different by every business, but the mechanics of figuring out where they're coming from and then the next step of acting is fairly similar across all businesses. Like you can find that out fairly quickly in order to make a marketing or a business development plan.
It's huge. Distribution is massive. And I think that it's been a point of, I don't want to say frustration, but like in my energy world in the business we had, and we still have, I'm still part of it, even though we sold it. It's like the TAM is big. There's a lot of potential clients, but the number of clients is, in the hundreds and that. It's like maybe like before we got into the tech side of it, it was maybe hundreds of companies that could potentially use our services. Once we got into the tech side, that expanded to thousands of companies, but it's still just like oil and gas companies in the US. You know what I mean? There's not that many. Yeah. So it's like you could build like the biggest, podcast and the other thing too is it's all like B2C in that industry. So it's like, and a lot of it is there's these really complex dynamics on whether someone will make a purchase or not of the service or product that you're providing. And so I've always been like really enjoying the content stuff and I see the power in it. And we've got some other businesses now that I'm finally able to use it and see the maximum effect. Like we've got a portfolio of short-term rentals and we've really leaned into Instagram because that's where, we look at the data and it's like mostly, moms or women in the 30 to 45 age category, which by the way is also people that are on Instagram a lot. Yeah. And so we've grown our Instagram to around 30,000 followers, and we really didn't start till this year. We had one, but we didn't get serious about it until kind of the beginning of this year. And so that growth has been mostly this year. And we're seeing huge dividends from that. Like we're seeing direct bookings and people visiting our site. The numbers are all crazy. But to your point, like every industry I think is different on how you gain that distribution. And then you have to think about what are the acquisition costs and then how do you tailor this? And it's almost like part of, should I do this business or not? Like, it's like one thing if you can make profit, but then it's like, how hard is it going to be to make those sales? Like, can you build a machine that creates those sales for you? And in some industries, it's just harder than others.
Yeah. And I don't think that building an audience translates to every business. Like you're saying, home health and hospice, just because I have an audience, like I'm not going to get a bunch of referrals for home health and hospice patients.
Right.
You're just not. And that's okay. Like, I don't think an audience is the silver bullet for every and all businesses, but I think there are specific businesses that are media accelerated. I think that makes a lot of sense. And so now I look at, okay, what can I do that is media accelerated? Whereas in the past, I wasn't doing media accelerated, but the same thought process needs to exist. Okay, home health and hospice, where are the patients coming from? It's very easy to do that analysis. They're coming from some care setting where a physician has seen them and qualified them. It's either the hospital, an acute setting like a skilled nursing facility, where they live in an assisted living facility, or their physician. So it's like, okay, cool. Now I know the 4 distribution channels. Those are the ones I got to go and hit. How do I market to them? They're not really online, so I got to hire marketers. Cool. I'm going to have marketers go out and knock doors. Like, it's the same thought process, right? It's as simple as saying, where are the fish? I'm going to fish there. But you have to be able to, you have to like really think about and be thoughtful about identifying where the majority of the fish are, so to speak. Because if you're not, if I'm just paying a bunch of Google ads for hospice patients and I'm spending 10 grand a month, I'm going to be frustrated that I'm not getting any patients. And I'm going to think, well, what the heck? Yeah, Google doesn't work ever. Google just sucks. Like, no, you're just using the wrong tool at the wrong time. Google works fantastically for these other businesses, but you got to figure out for your business, what is the tool? What is the channel that business comes through, and then double down, triple down on either creative ways or traditional ways to extract as much value out of those traditional channels as possible.
That's great. That's good stuff. Everybody should save that clip, and maybe we'll turn it into a clip and we'll post it, because those are all good things. When you look at new stuff, I'm assuming now you view it through this lens. Like, you made the comment earlier that you're still trying to figure out, you've sold a few businesses. It's like, where do I go? I know you and Chris have done like a tree trimming business. That's like one of those that falls into like the sweaty startup, like, boring business realm, which I honestly think it's a pretty good one, because I feel like the cost to entry is probably pretty low. And it's also something that a lot of people need. So there's probably a pretty big TAM. But maybe if you want, talk a little bit of that business. But really the broader question is just how, what lens are you viewing things from now as you pursue new things, given the experiences and the things you've learned?
Yeah, I'll go like theoretical, and then I'll go actually, practical. Theoretically, I just want to work on cool things with cool people. I know that like that sounds trite in and of itself, but I'm grateful that I'm in the position where I don't have to work anywhere that I don't want to work ever again. I'm not rich enough where I can buy an island, but I have enough money where I can be selective with where I put my time, which is awesome.
That's huge.
So the lens through which I look now is like, is this something I'm excited about? Is this with somebody that I want to spend my energy, my human capital with? Practically speaking, Chris and I kind of look at it through some broad lenses. The first one being, do we have a competitive advantage in this space? And there's 4 kind of key areas that we think about competitive advantages. Time. So like, do we have more time to throw at this than anybody else? There are businesses where you literally just need to invest the time into it and it will be successful, but people give up along the way because it's hard. It's hard to stay consistent. We're kind of at the point where we don't actually have any competitive advantages around time anymore. So I might have to throw that category out. But the second area is capital. If we're buying something in particular, could we move quickly when it comes to cash? Do we have a reserve where we can throw $20,000 at an idea, right? Is there an advantage from our perspective where using the cash or the capital that we have can give us an advantage over somebody who might not have it? The third area is expertise. So is this a business or a market where we have asymmetric expertise? We're smarter than, or we have more experience than somebody else who doesn't know that market. RV parks would be an example for Chris. Healthcare would be an example for me, right? And then the fourth area is distribution. Do we have an unfair competitive advantage in distribution? And so is it a media accelerated business? Can we use I don't know where we're at, 300,000 followers that we have combined across social media platforms to accelerate this business? And then from there, we look at the person. Okay, is this somebody that we want to work with? Do we have an operator for it? Because we're not trying to get in and operate these businesses on a granular level. We're trying to partner with operators. So cool, it may tick all those boxes, but if we don't have an operator for it, we're not going to do it, because that would mean one of us has to do it, and that's just something that we have said we're not doing. We're not going to go and operate these businesses individually. So that's like I guess 5 criterias that we look at in terms of actually going in and being interested in a business. Then the types of businesses, they're either going to be disruptable, like significantly accelerated by artificial intelligence, or not going to be disrupted at all by artificial intelligence. And I'll give you two examples. One of those would be tree trimming. How is tree trimming going to be impacted by artificial intelligence? I don't see a future in the next 10 years where tree trimming is significantly disrupted by artificial intelligence. There's still going to be people going out there.
Maybe like I'm trying to think as you say it, maybe like trying to figure out where the most trees could be damaged in a storm or something. Like, I don't know if you had a model that could like, I don't know. I'm just trying to think.
Yeah. On the business development side, sure. Marketing side, yeah, I think there's going to be pieces there, but like the fundamental delivery of that service,
probably not robots, at least soon, cutting down trees. Yet. Maybe
not in our lifetime. I don't think in the next 10 years. And then there's like the other side of the spectrum, healthcare. I don't think healthcare is going to be eliminated by artificial intelligence. I think it's going to be accelerated by artificial intelligence. So is there something we can do in that space to take advantage of the move? And so like all of these administrative positions that I think are going to be potentially eliminated, is there something we could do in that space? I don't really want to play as much in like the CPA, fractional CFO, legal, like a lot of these agency businesses that I think will be automated away within the next 10 years, because then it's just a race to the bottom at that point. And we don't really want to be in those spaces. So that's kind of how we look at what types of businesses we may want to invest in.
It's a really good framework. I mean, some of the things you said very much resonate with me. I don't know that I've written them down and said, here are my 4 or 5 things, but the first one, time, is a big one. I mean, I, got into this shiny object syndrome and have had it before. I think I've gotten a lot better. And what you find is that you can't chase everything without good partners or a good operator. You're never going to have you only have so many hours in the day, and you got to have some form of leverage with somebody to help you operate something. The distribution thing is big. Like, I think about that a lot. Like I mentioned earlier, it's like, how can I leverage media, or is this something that has a total addressable market that can be reached through some type of leverage form of media and or tech? That stuff's big. The level of expertise, that's what's always tough. It's like you want to learn new things, but then you gravitate back towards the things that you know. And so at some level, unless you have another expert that's coming along for the ride, it's hard to quickly just scale into being an expert at something new. Like that usually doesn't happen. It usually takes some of that failure we talked about at the beginning to start to become that expert. And those are all like really interesting. And then capital and, that type of leverage, it's like, there's different forms. Debt can be stressful, can also be powerful. Equity is great. If you have a track record doing something, I felt like equity starts to kind of come to you. And so some of those things, it's like it's almost like a formula, like you mentioned, but I think that's really helpful framework for folks to think about. We're getting close here on time, so I know you got to jump, but just, just in general, you kind of laid the broad strokes out there for what you're planning on doing. Any specific things that have piqued your interest? You're going to like peek behind the hood at all? I know Chris is always posting really interesting businesses, but anything specific that you're thinking about?
Chris and I have talked about this several times, but I think it's a good example of this like thesis in action. But so Chris, a couple of weeks ago, posted about this perfume vending business. And basically the way that it works is there are vending machines around the world where people can pay to get a spray of perfume, like cologne or perfume, right? And Chris posted about it and he's like, oh, this is really cool. And so he posts about it on Instagram and TikTok and Twitter. And Twitter was fine, but Instagram and TikTok, it takes off and it gets like 20 million views over the course of a week. And he starts getting these messages, DMs. It's like, hey, where can I buy these machines? It's like, oh, that's interesting. And so what do we think about instantly? Okay, let's capture these leads. So Chris throws up a landing page, starts collecting their information. And all of a sudden now we're building this database of leads of people who are interested in buying machines. And over the next 2 weeks, we generate 2,300 leads, 2,300 people, different people who are interested in buying machines. And the total number of machines that they said they're interested in buying adds up to like $50 million in revenue. Now, I think less than 30% would actually be serious buyers of these machines. But I think like it paints the picture where now we are in active discussions with the manufacturer to be the exclusive distributor of this machine in North America. We've already been having sales calls. We've already taken payment on, I don't know, 30 machines. We have a website up. We've had to translate their European website into English. We've had to create all new brochures, but we've essentially propped up this business in less than a month because of the distribution that we've scaled over the last few years. And so like, were we thinking about launching a perfume vending, like wholesaling business? No. But when the opportunity presented itself, like Chris acted really quickly. And now it looks like, I don't know that it'll actually happen, but like we could have $10 million worth of sales by the end of this year on these vending machines because of all of those things that we've been doing. So it's a media accelerated business. We have a competitive advantage in the distribution side of things. It's a physical vending machine, so it's not disrupted necessarily by artificial intelligence, and it just fit our investment thesis. So we're moving forward with that, and it's looking very promising at the moment. If we never talk about it again, you'll know why, because it failed, and we don't want to be too embarrassed by bringing it back up. But it's just like a really cool case study in, like, this is one of the things that we're working on right now because of this distribution that we've created.
It's crazy. So random and really cool and interesting. And I wouldn't have thought of it, but if you're always looking and always thinking, you come across things, and then you have, like you said, the distribution to act on it. Where can people find you guys that may not follow you today, or you specifically? And then if you want to plug anything
So
Chris are doing together.
The quick thing I'll add on the end of that is, like, this isn't the first time we've done this. We did this with crypto mining, and I think Chris talked about it maybe on your episode, where we launched, and in the first 3 months we did $10 million in revenue and like $1 million in profit. So we've seen this movie before. This isn't just like, oh, this could be really cool. That's the exciting thing, is like, now this is like turning into a repeatable process for us.
Love it.
Yes, we have a website called cofounders.com. We spent a lot of money to buy that domain, so you can come check us out, cofounders.com. You can find me on Twitter, cofounders Nik. I also have a podcast called Nikonomics, where I explore the economics of small business. But Twitter is probably the best place to come find me. And then Chris is Mobile Home Park Guy on Twitter.
Awesome. Nik, thanks for coming on. Hopefully let's do it again sometime.
Let's do it, man. Thanks for having me.
All right. Thanks, guys.